The weak retail rental market is starting to see declines bottoming out as rents for prime Orchard Road units declined 1.5% on 1.5%. But analysts say that further recovery could be hampered by the current economic outlook. Cheryl Lin reports.
The rise of e-commerce, a tighter labor supply and slowing population growth have seen a retail slump in recent years. Even in the last quarter, department store chain Metro's retail revenue fell by over 5%, dragged by lower sales in Singapore. June's retail sales also fell year on year. The weakness extends to the retail rental market. According to real estate agency Colliers, prime unit rents on Orchard Road fell 1.5% in the first half of the year. The official retail rental index for the central region has also fallen 18.5% from its peak in end 2014. Prime unit rentals for suburban malls remained flat. But the good news is that the declines have slowed compared to 2014, which once saw a quarterly dip of 5% for prime units in Orchard.
Over the last few years, the developers and landlords have been very diligent in trying to adapt to the consumer preferences, the change in the consumer trends. And now we are actually seeing a lot more F&B and activity-based tenant mix in the malls. And that actually helped, I would say, stabilize the rentals.
The problem now, analysts say, is that further recovery is being threatened by economic headwinds.
Now come the macroeconomic uncertainties that's, I would say, becoming more negative as the days goes by. And that will probably still hamper some of the weak consumer sentiments.
In addition, not all sub-markets see the same resilience.
It's a two-tier market. The other market seems to be under a little bit more pressure. The other market coming, there will be secondary floors, secondary corridors, and even secondary malls not supported by transport nodes and things like that. Generally speaking, there is resilience in the prime floors, but we can't say the same for the secondary floors.
Looking ahead, analysts expect the market to remain largely stable with only very minor changes. Now, the upside they add is that upcoming supply for the year after this is expected to be very tight, and that should cushion future declines, if any.